Why are investors using limited companies to invest in properties? In this video, I'm going to share with you why investors are using limited companies instead of buying the properties on their own names or in their own names. So I'm hoping that this will shine a light and you will make a decisive decision to buy a property based on your financial situation. Again, I'm not an accountant and I'm not a financial advisor. I'm only actually sharing my experience of what I've done or how I've helped people to actually start and scale their property investment portfolio. And again, if you like this video or any of my videos, don't forget to hit the like button below, subscribe to my channel for more of these amazing tutorials. So let's get going. So why investors are using limited company to invest or buy properties instead of their names? The number one advantage, basically, more mortgage tax relief is available to you if you buy a property in a company name. Let me explain how. As a landlord or property investor, you know exactly what that means. The government introduced a law in 2020, which means that landlords are no longer able to deduct interest as an expense in their rental income. So basically, if you are renting your property under your own name, right, before 2020, you were able to use interest as a tax deductible expense. So from 2020, I think the government did a scale and waived it up, finished that scale off, I think, by 2021. Basically, so since then, you're not allowed to fully deduct the interest payment you make for your mortgage as an expense. So what that means, basically, you get to be taxed more in your net profit. So the government taxed you more for the profit you make in your property investment. And obviously this only kind of impacts people that are over the 20% income tax bracket. Normally impact people that are on 45% plus interest rate bracket. If you are still on 20%, it may not impact you straight away. But obviously, if you're thinking about the future, it may impact you. Okay, because obviously you will not be able to deduct interest as an expense in your property. However, if you buy the property in a limited company, basically that interest becomes a tax deductible interest. So meaning you can include that as a cost. If you buy the property under a company name, you'll be able to deduct the interest. You can be able to deduct all the repairs and maintenance. So many advantages if you were to buy a property under a company name. Again, as I said, this depends on your income and then obviously your tax bracket. But if you're looking to increase your income by investing in more properties, so probably I would suggest maybe you consider buying properties in a limited company, because obviously then you'll be able to deduct that expense there as an expense. The second benefit you can get for buying a property under a company name, basically you can save thousands when paying corporation tax. Perhaps the biggest reason investors choose to form a limited company is the income tax in a company property. The current corporation tax is currently 19%, and then obviously the government is estimating to increase that by 2023 to 25%, whereas your income tax threshold is basically ranges between 20 to 45%. So again, if you're in that bracket, obviously, if you buy the property in that bracket and you buy it under your name, you get hit by a massive income tax bill. So whereas if you buy it under a company name, you will deduct the interest, you can deduct your travel costs, you can deduct the meetings you have with your investors or with your builders. You can deduct so many stuff from it, and then obviously at the net on the net profit, you'd only have to pay 19% as well. So if you're looking at 2023, that would be about 25. Due to the current economic climate, the government may consider keeping it at 19% or maybe just stick to maybe 22 or 23% instead of 25%. Again, it's still way better than being charged 45%. So again, that's another benefit you get from actually having your property under a company name. You can deduct your interest, you can deduct so many expenses, obviously have to be legal expenses, and then you pay tax on whatever is remaining. Again, this is what they call you pay yourself first. So whatever expenses you actually do, you deduct that before the taxman pays anything. Whereas if you're a landlord, then obviously you pay the taxman for the interest rate instead of actually deducting all your costs. Okay. The third benefit is that you can easily reinvest your funds after tax saving. If you're thinking of buying multiple of houses to rent out, or you want to own multiple houses, multiple assets, and you want to reinvest the income, you can easily do it with less tax or tax efficiently. Whilst individual landlords would have to pay income tax on all the profit, regardless what their intention is. Whether they're going to use the money to reinvest in properties or not, they still get taxed at income tax level. And if it is a company, it works differently. This is because you pay tax on the profit, on the net profit you make, and you can keep that money within the company, and you can directly reinvest the money back to the company to buy more properties. This helps you avoid further tax payment. And again, this is not to mention that due to the tax savings you make as a landlord, you have more money to actually spend, repair on the property, because obviously you have less tax to pay compared if you had the property in your name. For me, the fourth and most advantage of buying a property in a company name is basically gifting property to your families or to your children is easier with reduced inheritance tax as well. It's a massive benefit. If you're buying property with the end of not selling that property, providing an asset to a family, maybe you want your children to actually inherit the property, limited company might be a practical choice for you. This is because the properties are held within a company. You could mitigate the inheritance tax if the properties are within a company. You could do this by trust structure, or by share structure, or other methods that are not available for private landlords who bought properties in their own name. Let's now have a look at the drawbacks and see whether this is a strategy that you would want to execute. So let's now look at the drawbacks. Basically, taking money out of a company isn't that easy, because obviously you've invested that money has stayed within the company. So if you ever want to withdraw that money, you may get charged dividend tax. Again, you can only deduct a minimum of £2,000, which you don't have to pay tax on, and then anything over £2,000 should have to pay 7.5% up to 38.5%. And then also, if you got your company, if you've got your property in a company name, there will be no capital gain tax allowance for you as well, because obviously it's a company structure. It's not owned by an individual person. Again, you would struggle a bit there to actually able to get tax allowance. So basically, tax allowance is not allowed. And also, you cannot easily put the property into a limited company. Suppose you had lots of properties in your personal name. If you want to move it from a personal name to a company, it's as if you are buying the property from yourself to your company. So it's a bit kind of funny when you think about it. But again, these are the disadvantages. But however, the advantages outweigh the disadvantage to me personally. So that hence the reason why most of my properties are bought under a company name. Buying a property through a limited company, is that really for you? It's important for you to ask yourself these questions, because you need to know before you start buying your property. Consider how much money will you earn. Don't consider about how much money you are earning now, but how much money you would earn in the future. If your income falls under the higher income tax bracket, maybe 40 or 45% or maybe 50% in the future, maybe you want to consider investing in companies right now. Maybe you want to buy the properties, put them in a company name, because obviously you are planning and forecasting that you'll be earning more money in the future, so you are better positioned for when that time comes. The other thing also to consider is that if you already own a property, right, and it may not worth transferring the ownership to a new company, because obviously you get charged by lots of fees, including transaction fees, stamp duty, because it's as if you're selling the company to someone else. But obviously, if you have lots of properties, if you have plenty of properties, it might worth transferring them to a company name for the long term, because obviously if you've got lots massive portfolio, you may be thinking about leaving it for your children. It's worth doing it now before the law changes. Again, things to consider basically, are you really, or do you need to use a mortgage to buy your property? Right? If you are going to rely on mortgage to buy properties, it's worth considering forming a company now so you can buy your properties under a company name. This is because you'll be able to claim 100% of the interest you pay against the loan as an operating expense. So it will save you plenty of money in the long run. If you like this video or any of my videos, hit the like button below, subscribe to my YouTube channel for more of these amazing tutorials. I look forward to sharing the next video. Thank you so much for listening.